So let me welcome everyone. Good afternoon and welcome to all to this new appointment of the Women in Finance series at the Florence School of Banking and Finance. My name is Elena Carletti. I'm a professor of finance at Bocconi University, and I'm also the founding director of the Florence School of Banking and Finance back in 2016. I am delighted to chair this lecture today and would like to start by warmly welcoming our speaker, Tara Rice, and thanking her very much, in particular, given I know the period she's in, for being with us today, despite the very busy agenda and the other personal issues she's having at the moment. Tara is the head of Secretariat at the Bank for International Settlement Committee on Payment and Market Infrastructure. And before joining the BIS, she actually has a quite a rich career. She was the Deputy Assistant Secretary for International Financial Stability and Regulation at the US Department of Treasury. And before that, she worked 15 years almost in the Federal Reserve System. I think I actually know you when you were at the Federal Reserve. I got to know you when you were still at the Fed. And in one of the positions she had there was the Chief of the Global Financial Institutions section. She was a visiting member of the Financial Stability Board in Basel in this capacity. And she also received, and I think I'm very proud to say that she also received a special award by the Fed for a special achievement award for outstanding contribution towards the objective and mission of the Fed. I think this is a fantastic achievement that I didn't even know it existed actually. So very happy to read this. So Tara is not just an excellent economist and an excellent policymaker. She's also a person who is very active in what concerns women's empowerment, support to women, and engagement in this field. And today, indeed, the topic of the speech will be women's economic empowerment, the role of payment and financial inclusion. So the topic is very much targeted to this audience. I'm happy to see that probably this will also become a paper later on that will also be circulated more broadly. I'm very happy that this was a trigger for this sort of publication. Before giving the floor to Tara, she will be speaking for about 15-20 minutes, and then we will have an open discussion. And we will also touch more generally also what the BIS does in the topic of women and female career. But before giving the floor to Tara, let me just mention that we, for the discussion, I ask all of you that want to ask a question to please write your question in the Q&A box that is at the bottom of the screen so that I can read it and can pose it to Tara and we can have an open discussion. And now, Tara, with all my thank again to you for being with us, the floor is yours for your speech. Thank you again.
Thank you so much, Elena. I'm really delighted to be here, and hello to everyone. And I'm particularly delighted to be with you, Elena, somebody who is also so passionate about diversity and inclusion. So thanks so much for the invitation. Yes, as you noted, I want to talk about women's economic empowerment and related to payments, as well as what we're doing in the CPMI, the Committee on Payments and Market Infrastructures. So it's very well known that financial inclusion, that is the access to and the usage of affordable financial services that meet user needs, is central to promoting economic growth, reducing poverty, and economically empowering men and women. However, women face significantly higher barriers in achieving financial inclusion. This leads to unbalanced access to formal financial services. The causes are many. Today, I want to focus mainly on one area of financial inclusion: payments. Payments are generally known to be one of the very first services to onboard unbanked and underserved people and to provide them with a transaction account. A transaction account is an essential financial service that serves as a gateway to other financial services, such as savings and credit and insurance. Remittances in particular, that is cross-border payments sent home to support families and their local communities, are in many countries the primary source of income, often surpassing official foreign aid. But remittances are just one type of cross-border payments. More generally, cross-border payments can be defined across three market segments. First is wholesale payments. This is financial institution payments across borders, and typically of high value. Second, retail payments, say related to smaller value purchases across borders. And then third, of course, remittances. So How many people in the audience have made a cross-border payment in the last year? Raise your virtual hand. As you might have experienced yourself, they can be very cumbersome. We summarize those difficulties in 4 primary challenges. They are generally costly, can be slow, suffer from low transparency, and are not widely accessible. Many of today's frictions are rooted in differences among domestic payment systems, such as different opening hours or technical standards or data requirements, leading to significant complexities in making improvements. When addressing these challenges, it quickly becomes apparent that not all things are equal when looking at gender, especially with regards to access, financial literacy, and earning gaps. The source of these inequalities are often deep-seated in existing cultural and societal structures. So let's go back to remittances. Recent research finds that while women typically earn less than men and pay more in transfer fees, the average remittance amount that women send home are the same or even greater than those of men, implying that they tend to remit a larger portion of their earnings than do men. This research also shows that women tend to rely more on in-person cash transfer services, and when these services become unavailable, for example, as seen during the COVID pandemic, it creates significant barriers for migrant women to send remittances. Since cash-based services do not require a transaction account, they are less likely than digital payments to serve as a gateway to broader financial inclusion. Digital payments and other fintech products bring additional differences between men and women. A 2021 BIS survey showed that men are more likely to use fintech products irrespective of the provider. The gender gap is not specific to who provides fintech products or services, but rather to the products themselves. This BIS survey shows a large fintech gender gap. That is, while 29% of men use fintech products and services, only about 20% of women do. The gap was present in almost every country in the sample and was roughly the same size for products provided by fintech entrants and those offered by traditional financial institutions. This analysis reveals that country characteristics and individual level controls explain about a third of the gap. Over 1/2 of the remaining difference is due to the unwillingness to use new financial technology or fintech. So let's discuss the reasons for these differences. First is limited access to formal financial services. Access to properly regulated and supervised financial services is a key element of financial inclusion. However, it is seen empirically that women worldwide face barriers in obtaining transaction or deposit accounts, limiting their ability to transact, save, and invest. In developing countries, 58% of women own an account compared to 65% of men, according to the World Bank. In 2021, it's estimated that about 740 million women did not own a financial services account globally. A key factor is that an estimated about 1 billion people worldwide, men and women, do not have a basic identification. And many more have IDs that cannot be trusted because they're of poor quality or cannot be readily verified. Women are more likely than men not to have proof of identity, especially in low-income economies, where 30% of men and 45% of women lack a foundational ID. Moreover, this lack of documentation was also a significant barrier to accessing financial services. The second reason for these differences is financial literacy. Financial literacy is one of the key drivers of financial inclusion, but women often face limited opportunities to acquire financial knowledge and skill due to various social and educational barriers. A 2022 study revealed a financial literacy gap between genders, with women registering lower financial literacy rates than men. According to this study, women correctly answered 45% of financial related questions correct, but 55% for men taking the same test. And the US Department of Education reports that 3.8 million American adult women possess literacy skills below a basic level. What is a basic level? This refers to reading, writing, and math skills at a 3rd grade level. This lack of education makes it very difficult to understand statements, credit card agreements, and other financial documents. The challenge here is to provide the knowledge of what is a good choice to use and perhaps what is riskier. For example, with Swazi migrants in South Africa, inaccurate perceptions of eligibility criteria for using formal remittance services was found to be a key barrier to their usage. This financial literacy problem is complex, but is essential to address the core issues. It should be an area of focus for policymakers and may offer a powerful, practical, beneficial step with the possibility to achieve positive near-term results. The third reason is the gender wage gap and economic disempowerment. Globally, women continue to earn less than men for the same work, limiting their ability to accumulate savings and invest in their future. On average, women earn approximately 16% less than men globally. This economic disempowerment often leads to women being more susceptible to financial vulnerability, poverty, and exclusion. The gender wage gap contributes to the imbalance in financial inclusion as women have less disposable income to allocate towards banking services and investment opportunities. The fourth reason is the digital divide. The digital divide is still prominent globally and particularly affects underserved and unbanked people. This digital divide is particularly seen in developing countries where women often have limited access to technology, digital skills, and internet connectivity, hindering their participation in digital financial services. Women in low and middle income countries are 26% less likely than men to use mobile internet, and women on average are 10% less likely to own a mobile phone, a barrier in accessing many digital financial services, including, for example, mobile money. For international transfer, as I noted, women are seen to rely much more on money transfer businesses compared to men, where this pattern is consistent with other research, which has shown that women tend to use private and less regulated money transfer business rather than banks. Since the usage of digital financial services has increased over the past years, not least due to the pandemic, it's even more important to make sure that women can be part of the digital financial ecosystem. The value of mobile money transactions is growing from about 40% of GDP to 70% in low-income countries. Advancement of so-called super apps are disrupting and making inroads in traditional banking areas as well. In China and Southeast Asia, for example, closed-loop systems have succeeded in establishing a large and highly engaged customer base and expanding into financial services beyond payments. Globally, then, such digital platforms are directly impacting and changing the way payments are made over traditional means, and it's therefore crucial to plan and ensure the equitable inclusion of women. The fifth reason is entrepreneurship and access to credit. Our work will not be complete once the payments access issue is overcome. The next gender hurdle is often seen in access to credit. Access to credit is vital for entrepreneurship and economic empowerment. Women entrepreneurs face multiple barriers in accessing credit, including discriminatory lending practices, lack of collateral, and limited business networks. In developing countries, women-owned enterprises face a credit gap of about 1.5 trillion, according to the World Bank. This gender financing gap prevents many women from starting or expanding their businesses, limiting their economic potential and inhibiting their financial inclusion. Efforts to address this gap should focus on improving women's access to credit, providing tailored financial products, and fostering supportive ecosystems for women entrepreneurs. And finally, the last challenge is policy and regulatory challenges. These contribute to unbalanced financial inclusion. In some regions, legal and regulatory frameworks restrict women's economic rights and limit their access to financial services. Discriminatory laws, such as those governing property rights and inheritance, hinder women's ability to build and transfer wealth. Governments and policymakers should implement gender-responsive policies that promote women's financial inclusion, eliminate legal barriers, and ensure equal economic opportunities. So what can be done to further empower women economically? Well, at the end of 2020, the G20 endorsed a multi-year and multi-dimensional program to enhance cross-border payments. The program is led by the Financial Stability Board, the Committee on Payments and Market Infrastructures, the BIS Innovation Hub, the IMF, World Bank, and other bodies. Following the endorsement of this program, in 2021, the G20 then endorsed quantitative global targets to reach, with the aim of addressing those challenges I mentioned at the beginning around cost, speed, access, and transparency. However, enhancing cross-border payments, as I noted, is a complex problem, and it's going to require the combined efforts of many public and private sector stakeholders. There's no single solution to enhancing cross-border payments, and no individual institution alone can achieve the step change that we need to meet the targets by 2027. Over the past 2 years, the foundational work has largely been completed, and it's now time to start planning the next stage of the work. In particular, the program is now focused on how to move to developing specific proposals to enable those material improvements within existing systems and arrangements, as well as the development of new and inclusive systems. The success of the program depends on the active engagement of the private sector, and we are intensifying our engagement, including at the executive level, and to further broaden our geographic coverage. This includes enhancing outreach beyond the G20 jurisdictions, which within themselves may currently face greater challenges in improving cross-border payments, but may also be well positioned to contribute and be a significant lever in the effort to increase women's inclusion in finance. Also underway is the Payment Aspects of Financial Inclusion, affectionately called PAFI, initiative. In 2016, the World Bank and Committee on Payments and Market Infrastructures published a report to help countries expand access to payment services. This report outlines 7 guiding principles for public and private sector stakeholders and contains possible key actions for countries that wish to put these principles into place. Among those principles are safe, efficient, and widely reachable infrastructures, robust legal and regulatory framework underpinning financial inclusion, transaction account and payment product offerings that effectively meet a broad range of needs, availability of a broad network of access points and interoperable access channels, and effective awareness and financial literacy efforts. Since 2016, the PAFI framework has been adopted as the analytical tool underpinning for designing and implementing country-level actions and global efforts to improve access to and usage of safe transaction accounts. And as a follow-on to that report, in 2020, the World Bank and Committee on Payments and Market Infrastructures published the report, Payment Aspects of Financial Inclusion in the FinTech Era. This report connects FinTech innovation with financial inclusion, providing a framework for incorporating and leveraging technological opportunities to promote access and use of transaction accounts, while also addressing particular risks and challenges. So given the initiatives out there, what additional actions can we take to improve women's opportunities? Let me review 5. First, we need to capture more data. We need to provide better tracking and monitoring of women's financial access. There has been an initiative to collect gender disaggregated data since 2018. And since then, the number of countries have grown. But without solid empirical data, it's difficult to fully target actions. We need to start recording gender aggregated data wherever possible. Identify regions and corridors where females are particularly active and where we could have the most impact. There are a number of corridors that are well known to be more used for females, and we could target those particular corridors to aid in empowerment. Number 3, to identify and mitigate regulatory or legal impediments to women's empowerment. Once those are identified, it will be necessary to take actions to address such impediments, either through regulatory frameworks or other means. Number 4, leverage technology with a gender-specific focus. As I noted earlier, there are differences in the use of technology between men and women. So digital innovation may not be the panacea in and of itself, but the technology could be leveraged in creative ways to make improvements. And finally, focus on the future. There are more than 590 million young women in the world, defined as in ages of 15 to 24. This is a tremendously diverse group, transitioning through different life stages within vastly different contexts. We could develop high impact initiatives focused on this segment of young women to improve their literacy and access to financial services. So in conclusion, unbalanced financial inclusion for women generally hampers their economic empowerment and perpetuates gender inequality. To address this issue, a multifaceted approach is required. Governments, financial institutions, and international organizations can champion and prioritize efforts to improve women's access to formal financial services, enhance financial literacy programs, bridge the digital divide, promote women's entrepreneurship, and address the gender financing gap. By implementing gender-responsive policies and ensuring equal economic opportunities, we can work towards a more inclusive and equitable financial system for women worldwide. It will require investment in infrastructures and resources, significant forward thinking, a little failing forward, and a heroic amount of international collaboration, as well as sustained political support. Thanks, Elena. Let me stop there.
Thank you, Tara. This was greatly interesting, and for somebody, in particular, also for somebody like me that has always seen and followed a little bit from far away this topic, but this was a very comprehensive panorama of what the various institutions and the various initiatives that are out there. So I think it would be highly interesting to read also the paper that you're trying to develop, and some people are already asking whether we can distribute it once it will be ready to participants and so on, then we will be happily do it, of course. But let me come back on some of the issue. Let me invite again also the audience to pose questions if there are any. Let me come back. I mean, of course, you say there are, in various occasions of your speech, you gave a number of reasons for particular aspects. Let me start from the very first. I think you said there are 5 main reasons as to why there is a less use of payment system by women than by men. And then you talk about the initiative, what is already there, what can be further done. But in all this, in the very first list you did with the impediments, the reason why there may be a lower use, you mentioned limit to financial access, more limited financial literacy, gender pay gap, digital divide, and entrepreneurship and access to credit, if I took note correctly. But irrespective of the precise reason, I was wondering, what is the best way to progress, or what is the way it is progressing at the moment? I mean, it is trying to address all these impediments at once, or there are priorities and you think that somehow addressing one may also help in addressing another, so that it becomes more a consequence of another? For example, digital divide, I understand that maybe women are less technologically developed than men, but in the moment when they become more financial literate, I would imagine that, or more educated in general, I would imagine that also digital divide can be reduced. So to which extent are they separate obstacles to be tackled one by one, or to which extent one may precede another and therefore should be the first priority?
Thanks, Elena. Yeah, so with such a complex and multifaceted set of challenges, you're right to point out that there should be some prioritization. And that's why I like to start with payments. We call payments the gateway into financial inclusion, into financial services, because it's a very basic financial service that nearly everyone will make in their life to either pay or get paid. And so if you can somehow move off of just cash-based payments onto any other type of platform, you're already taking a step forward there. And so, what are ways to do that? I noted that there's issues with digital IDs, and that is a rather, not cumbersome, but that's a rather complex and long-term project to try and get IDs for everyone. But still, if you could get some simple types of account where perhaps you don't need as stringent an ID, then you could already start to make some sorts of payments. I think that financial literacy above almost everything is going to be one of the most important and one of the quickest ways to improve financial inclusion. And then the other priority I would make would be access. So what do we say when we mean access? It could just mean having opening hours at an institution one night a week for a little bit later, because when women work, they can't get to the bank during the day. It could mean for every transaction account opened that there are 2 debit cards given to the owners, so that the man doesn't just have the debit card and the woman does not. It could mean when you open any type of account that you are required to have some financial literacy training, even if it's very short, that also teaches people how to earmark money for certain critical expenses, such as education, healthcare, things that children need, like clothes and food. Even that bit of financial literacy, financial education would go a long way to helping people learn how to budget and save for those very important expenses.
Thank you very much. First of all, let me say that there are people connected from Nigeria, from India, so that they are, of course, I mean, although the same topics we are also applied to developed world, not just developing countries. But it's very nice to see that the people are directly participating in this conversation and again requesting the paper. So you must write it. There is no way out of this. But let me ask a question by Ridhima, from a research fellow in Daily Commission for Women in India. So the question is, how do you think developing nations like India can enable gender inclusive working environment?
I think that is an important question around the world, and not just in developing countries, right? I mean, we still struggle with this, Elena. Maybe this would be the opportunity to say what we're doing on gender inclusion.
Maybe then let me first go back to the talk, to the speech, and then we go more broadly on women and women at work, if you don't mind, so that we don't switch back and forth. Let me still ask 2 questions on your presentation. One that I was very, I wouldn't say surprised, but very curious about was that you mentioned on several occasions regulatory impediments. Can you give maybe some examples of what is a regulatory impediment that disadvantage women could be? And the second, do you think we should go even further and perhaps think of regulations that would actually favor women rather than, so taking out the disadvantages for sure, but rather favor women? For example, access to credit. Can we think that we can relax some of the requirements if the entrepreneur is a woman, and therefore we can favor this access?
Both good questions, Elena. On policy and regulatory challenges, one that I noted was that there are countries in the world where even women are disadvantaged with regards to property rights, owning property, and inheritance. So inheriting wealth, even regardless of how much wealth it is, right? And if certain discriminatory laws, such as those, mean that any bit of wealth that is accumulated in a lifetime go directly to the men, let's just say there's a family of 2 brothers and a sister, it means you contribute to, it's a cycle. You contribute to exclude the female from that wealth generation and collection.
Okay, let me go then to a question by anonymous attendee instead. How your financial institution is addressing the lack of financial literacy to empower business active women to make informed financial decisions, effectively managing their finances and achieve sustainable business growth? So basically, how are you addressing the lack of financial literacy to empower women?
Yeah. So here at the bank, we would not do that directly. I would say that is something that's done in a grassroots manner. And that can be done in a number of ways. I had suggested that even when opening a transaction account, new account owners could receive some financial literacy. But there are also a number of programs that can enhance financial literacy. Of course, as I noted, that there are many women everywhere, and even in the US, that don't have those basic skills of even a third grade reading. So having a lot of, having a literacy program which is based on reading is probably not going to be the most effective solution. But there are other ways to do training videos, for example, especially those that could be largely accessed. And then to do broader sort of in-person seminars, again, at a financial institution or at a community-based center to teach some of the basic skills about financial literacy. I mean, there's a number of ways that could be done. I think the thing to do is first in the community. Every community is going to be different, and every community is going to have slightly different needs based on the, we would say, Elena, initial conditions, right? What the basic, reading level is, and whether people can actually get together in a community center, whether people are too dispersed. So that the specific program is going to be really need to be tailored to the specific community. But you want some basic things that teach people how to make a safe choice in payments, to teach people what a general budget is, to teach the simple idea of a rainy day fund, whereas if something happens and you can't work, you can still pay for your housing. And importantly, to be able to discern or discriminate between what is sort of an essential expense, such as food and clothes for children, and what's a nice to have expense. So right, there's some very basic tools that can be taught. One observation, or I should say, one fact that I found when I was doing the research is that, when women versus men, when women receive the remittance in the family, there's more money spent on children's clothing. So there's different decisions that are made depending on who has the debit card or who receives the payments. And I think in really educating both men and women on making a good decision on that payment when they receive the money is really the first step.
I thought that was also interesting when you said before that women do make larger remittances in percentage of their salary, so that they give more to their families rather than spending themselves. I think this is an important element, I thought, and it goes in the direction when they receive the remittances, they spend more on children. I think they tend to save more for the others, in particular for children. Probably it's just a matter of something innate in women, to some extent, that the first thought they have once they become mothers is clearly the children, maybe more than the men do. I also find amazing that this financial literacy and financial education is a priority everywhere in the world, I would say, because of course, with the different proportion, clearly so, even in developed countries, we have a low knowledge many times of financial literacy and education. And it's astonishing how difficult, if I think of Italy, for example, which is of course not a developing country, but if I think of a developed country, or apparently developed country like Italy, it's very surprising to me the difficulty that there is in introducing financial education in schools, which in a way, it would be the most direct channel of improving financial literacy in the country for men and women, as you say, because also men, of course, can be better educated in making the right choices with their savings in particular. So it's astonishing to me. Everybody agrees that this is one of the basic principle and need, but there is a difficulty somehow in making it institutional in schools. So another question, sorry.
I was just gonna say that's right, Elena, and I think putting such training and education in the schools is a fabulous idea. And you can think about doing it in many different ages, right?
Exactly.
So you can teach
Exactly.
a 6-year-old just basically what it means to save a couple of pennies, but you can teach somebody in the 10th grade or somebody who's just starting a part-time job really then how to save and budget.
Exactly.
Yeah. So thank you.
Okay, so there are two more questions. One is, have you considered the effect of culture on the inclusion of women and their economic empowerment?
Yeah, absolutely. And this is something I wanted to study a little bit more. It goes back to that, to what I said earlier about initial conditions. We like to talk about initial conditions in economics, right? It's like the characteristics of the particular, community really do matter. And those are based on cultural and societal norms. Oftentimes they're really deep-seated, and I noted that at the beginning. So one has to first look at some of those cultural differences. In some countries, women aren't really allowed to go out, let's just say unchaperoned and go shopping. On the other hand, in other countries, in some countries, women are really responsible for the shopping and right in the home keeping. And so you have to really go down to the very foundation of those cultural and societal differences. And then from those, discover what the primary challenges are and build up from there. So the solutions are going to be different around the world.
Okay, then there is another question that has actually put in the chat box rather than the Q&A. So again, please feel free to still ask questions, but if you use the Q&A box, then I have altogether would facilitate, but as you prefer. So the question is, the BIS has been very actively advocating digitalization, especially CBDC. How can new technologies like CBDC or tokenization, how can this new technology help with women empowerment? And how can programmable money, for example, help in redirecting the resources transfer specifically to women and improve their empowerment?
I love the question about programmable money. I'll get to that second, but yes, so the BIS indeed has been advocating digitalization of the future financial system. And BIS's annual economic report just came out, covered that topic. But there are some simple things that can help to empower women that have to do with digitalization. So I said earlier that women may not be as digitally connected as men. So solutions would be to help women connect digitally. How could you do this? You could recycle old cell phones and provide those to women who may not otherwise have access. You could provide free cell phone subscription to those women. So with a free phone and a free subscription, they could begin to use mobile money. You could provide, for example, in a community center, computers with internet, secure internet, and help women to be able to open some type of account. So there's a number of ways to jumpstart the digitalization and to allow them to get some type of online account. Taking it a step farther, CBDCs are a form of central bank money, and they are a safe form. So we like to say in the CPMI that as far as settlement goes, so the settlement is a legally defined moment where a transaction is completed. There's two types of settlement assets. There is commercial bank money, which we consider to be relatively safe, and there's central bank money, which we consider to be ultimately safe. So to the extent that you can build products and services on top of central bank money, which is the safest form of settlement asset, you're anyway going to be creating safer financial sector. Such, let me just say, not so safe forms of money would be, stable coins and crypto, which are not backed and do not settle in commercial bank and central bank money. So it's important that we keep the financial system, the monetary system, built on this foundation of safe central bank money. And then once that is, once that's ensured, then you can build innovation on top of it. But at the end of the day, you want to know that your dollar is worth your dollar, right? And that you are certain that you can redeem that at par on demand when you're ready.
Yes, absolutely. Let me just read the one comment. So the person that was asking before the lack of financial literacy, how can we do to address this lack of financial literacy to empower women? He wrote, first of all, thank you very much for clarification. But then he or she wrote, I'm emphasizing on active women in business because I'm coordinating in my country a digital project that aims to facilitate active women exporters to access and use digital tools. But I'm facing challenges of proving them financial digital, maybe improving their financial digital literacy skills, how to brand digitally their products, increase the value chains of their products via digital platform, and the complex payment system modalities of e-commerce ecosystem. I don't know if you have any comment on this or any suggestion, maybe where the person can go.
That's a very complex question, and thanks for bringing up the business piece. I had skipped that, not inadvertently, not on purpose. So this is a very, very specific problem in the sense that to further empower women in businesses, I'm understanding that the participant would like to be able to improve the brands digitally, to get people more digital, and probably then also to get to more visibility. So here in this case, I think capacity building or technical assistance could be valuable. And of course, there's two institutions that are very well known for capacity building. It's the IMF and the World Bank. Both of them are quite involved in technical assistance, especially as it comes to payments. And this might be a first place to look. And in particular, the World Bank has been doing quite a lot of work thinking about technical assistance with regards to payment systems and fast payment systems. So really kind of like the very core of digitalizing payment systems would be first getting a fast payment system up and running. So I would encourage the participant to take a look at the World Bank and IMF sites and see where there may be both resources, but potentially also some capacity development.
Okay, so he's actually, I'm Francis, so he's a man who was asking this question. Currently in Torino for a master program, but I am Burundi equals focal point in my country. So we have a very heterogeneous actually attendance today. Okay, maybe now it's time to go back to the question of Ridima that was asking, how do you think developing nation like India can enable gender inclusive working environment, and maybe also talk about what the BIS is doing, and in general, how can working environment for female can be improved?
Thanks for that question. Yeah, let me bring this back to what the BIS is doing, because I think the gender diversity is, as I said earlier, it's not particular to one country, or it's not particular to developing countries or developed countries. It exists everywhere. And several years ago, so the BIS has been working on gender diversity for many years, but 3 years ago, I would say we really stepped up our game here. And the BIS is just fully committed to welcoming diversity across all dimensions, including gender, sexual orientation, gender identity, nationality, race, ethnicity, physical abilities, age, beliefs, educational background, and experience. So this initiative is really centered around the BIS's mission on international cooperation, because we recruit people with diverse backgrounds from different central banks. And so there was really a desire, as I said, to up the initiative here. We first set out to measure gender diversity or gender and by setting a commitment to set a 50-50 gender target to fill vacancies. So this is one way. Now that's not allowed in every country, but here we are allowed to explicitly set a gender target of 50-50, half-half to fill vacancies, and especially for line managers and senior professionals where there were many fewer females than men. And we're making progress. Between 2015 and 2022, the percentage of female line managers increased from 9 to 29%. So nearly threefold increase. But that's not all we're doing. We have now a diversity steering committee, and I'm a member. It's made up of representatives from around the bank. The committee oversees activities related to diversity and inclusion. And we've built a bank-wide program. So it's not just one piece, i.e. recruiting, but we're thinking about diversity from all angles. Some examples are, we've started a series of staff-led diversity networks where people can get together and celebrate diversity, educate about diversity, and share information and ideas. We have a recruitment working group that's worked for many years to improve recruitment for diversity. I worked on that as well. And it really comes down to thinking about hiring from start to finish. So for example, from day one, take a look at that job advertisement you have and see if there's any implicit bias in that. And it so happens that there's now a tool called Textio, which enables you to put a job advert in there it's a web-based application, and it will tell you what percent is not completely neutral. So there's some very simple tools that we've begun to use to try and enhance our recruiting. We also have, we're also working to review our policies around well, not just recruiting, but also having a safe and respectful workplace, around benefits to new employees. For example, is the childcare benefit, is that advantageous to women, or is it not significant enough? And are women, then potentially taking other opportunities because there's not enough benefit of childcare? So we've been reviewing all of these policies over the past several years around all of these different efforts. So what I would say just in general is having a firm-based program which looks at not just 1, 2, or 3 aspects, but really building out a larger program. Having a committee that can really push forward ideas, and taking a look at current policies. And then finally, the other thing that we've had that's been hugely helpful is we have complete support from the top, meaning that our general manager and deputy general manager are extremely involved in helping us to further our diversity journey.
My own experience is that you need a strong commitment from the top. If you don't have this strong commitment from the top, it becomes much more complicated to do. So, I mean, I start from your last sentence, what you said, but the whole activities that you actually describe are really remarkable. One thing that I didn't hear you mentioning, but maybe you did, and I'm sorry if I miss it, is whether you have programs in helping to develop in talent. So, because many times, it comes, for example, I'm familiar with central banking, but even in my university, there is a desire to have targets and to achieve targets and so on. But then you don't have enough diverse people, whether they are female or whether they, as you said, diversity, we shouldn't think of it all in gender, but we should think it in a much more multifaceted way, of course, with age, nationality, sexual orientation, and so on and so forth, and background experience, and so on. But then you need to have a pool of people from whom you can choose, and you can pick the candidate that can take a higher role. So do you have development programs so that you can help, let me call them minorities, or I don't know how to call them, this diverse group that you target? let me put it this way, so that you can ensure that you can reach your targets eventually, because you will have adequate candidate for this position. So, or
Yeah.
how do you do it?
So that's really a critical piece, and thank you for raising it. So it's not enough just to recruit for diversity, right? You need to retain for diversity. So you need a retention program or a talent management program, and you know, to be successful, at least we have realized that we need to be also a little bit more flexible. So when we think about, you know, academics, Elena, both you and I having studied for a PhD, it's important what school you go to. It's important what you studied and where you studied, and that degree, in a sense, is that, or that pedigree, is a key factor for advancement. However, to be more flexible, the BIS is considering jobs where you don't necessarily need to be a PhD. We're trying to promote and train really talented analysts, for example, to do more now than just program, but to also move into writing and analysis. It's not necessarily that it would be the same job, or that you know, but there has to be room to be flexible, to create new roles, to move people into talent management, is what I'm trying to say.
Exactly. You need the rules. Exactly. That's exactly what you said. Okay. I don't know if there are any more questions. So maybe, Tara, if you want to share with us a few minutes your own experience somehow. If you look back, you said before that somehow you and I are still struggling with these issues to some extent. What's your looking back somehow? What do you think? How do you think about this issue personally, if I may ask it?
So happy to answer that question. So I think I'll tell you a personal story, which I look back now and I think it's funny, but it was horrifying at the time. I think we've come a long way personally, but I think we have a long way to go. So when I had just finished grad school and I was a new economist, I was at a seminar and I was sitting in the back. I was sitting at the back of the seminar. It was a crowded room. It was so crowded. You know, some of those seminars where you just have to kind of squeeze in and stand in the back. And it was about, it was an analysis using credit default swap prices or spreads. And I had done a lot of work on this. It was one of the first things I needed to do. I needed to, for supervision, we were thinking of using CDS spreads to provide some information on financial institutions. So I knew quite a bit about what the underlying CDS spreads tell us, what the duration were, which ones were most liquid, which ones were not, all for purposes of real, like, using the analysis for supervision purposes. So I'm in the back of the room listening to this presentation, and I realized that that the researcher had taken all CDS spreads. He didn't look at the year. He didn't look at how liquid they were. He just took them all. And so he had stuff that was 1 year, 10 years, yes. So I said, you know, you might want to consider just using the 5-year. So it's more consistent, and this one's pretty liquid, and many, you know, firms are using this one. And the entire room turned around and looked at me. Who's this person? Who's this woman in the back? The entire room turned around and looked at me. And I didn't see another woman in the room. And he discounted my comments, maybe because I was the only woman, but he discounted my comments. And as he went on, I said, okay, you know what? I'm going to try this again. So I raised my hand again. And I tried to explain a little bit more clearly that the liquidity of the CDS spread really matters in this type of analysis. And finally, at that point, I got a couple of nodding heads, and I thought, wow, you know, something here has to change over time.
Having said that, I was, let me not say where I was, but last week I went to a conference, to an academic conference in a place in France, which is renowned not to be an unfriendly women country. On the opposite, right? I mean, France, from an Italian, France is one of the dream country from this perspective. And it was me and 40 men in the conference. I couldn't believe it when I entered the room. I thought, my goodness, and it was a conference by invitation only. So it's not a conference where you have to send something. So this was a little bit of going backward. Let me just read another, just going back to the conversation, then maybe we close because it's 2 p.m. But greetings, my name is Ruth, Communication Officer of LEAPA & Co., the first Burundi e-platform payment for merchants to process card payment from customers located anywhere in the world. Indeed, the project Francis, the one he was talking about before on this, how to improve the digitally, the products and the communications and so on. The project that Francis is talking about, LEAPA, is involved to support active business women to pay and be paid digitally. How can LEAPA benefit of your advices? So I don't know if we can suggest to be in contact with you, or if you can provide ways in which maybe they can get improvements. But I mean, this is just a concrete example of the interest in your talk and the advice that, thanks to your talk and your institution and the initiatives you mentioned, you can give for really making a difference in the empowerment of women. So I think this maybe is a very nice moment to close and to thank you, Tara, again for your speech. And let me remind you that the attendees would be very happy to receive your paper. So let's just see how best we can then send it to them once it is, when it is ready. Don't know if you want to say something on this, LEAPA, how can they get advice on how to improve, who could they contact, or maybe we can do it offline if you prefer.
In 30 seconds, I could say this is exactly the type of issue that the G20 Cross-border Payments Program is designed to solve. We've been working vigilantly since 2020. There's information available on the webpage, and now we're turning to implementation. It's like this pivot now. It's so exciting to us with outreach and joint task force and community of practice. A lot of this is on our website. Plus, my information's on the website as well. I'm happy to receive questions. But this is really the moment of excitement for us, where we're hoping to actually see some changes put into place.
Well, then let me close on this positive note that we hope to see changes all over, but in particular in this case, including the payment system, and to improve the way women can then improve their status in society and in life in general. Thank you again, Tara. This has been fascinating. And thank you again for all the participants and the questions and so on in the discussion. Thanks again. And I hope we will have further occasions soon. Thank you.
Thank you.
Bye-bye, Tara. Bye-bye, everybody. Bye-bye.